Hello friends, I Narendra Singh welcome you. I am not a SEBI registered analyst and just sharing my views here. Before buying or selling any security in stock market, kindly consult your financial advisor. Let's learn together and earn together. Today we are talking about upside gap to cross pattern, and it is a bearish candlestick pattern and brings the price down. Japanese has taken the name of this candle pattern on two crows which are coming down from a height. In the same way, after the formation of this pattern, price comes down. Let's discuss the reason behind its formation. This pattern takes formation after a bullish trend, and when price is at top, then the first candle of this pattern takes formation, which is a strong green candle, and it tries to take price further up, and after a gap up the next candle appears as the price is on top. So because of profit booking, this candle becomes red and brings price a bit down. The next candle again tries to take price up, but because of heavy profit booking, sometime it becomes a strong red candle and it is bigger than the previous red candle and it engulfs the previous red candle. Mostly upside gap to crows is made up of only 3 candles, but such kind of candle pattern can also be considered as upside gap to crow pattern. In a good upside gap to crow candle pattern, the gap between the opening of the green candle and the first red candle is quite big and it is considered best. These are some different kind of upside gap to cross pattern. If we see carefully, we will find that these have a common difference, and it is the size of upper and lower wicks is not same in these all, and these all work as per the different market condition. On one side, the upside gap to cross changes the upward journey of price into downward. Just opposite to this, the downside gap to rabbit changes the downward journey of price into upward. Let's try to understand the connection of its volume with this pattern formation psychology. Assume price of a stock is moving up and you see a strong green candle formation and check its volume. The next candle appears and try to take the price up, but it failed, but its volume is greater than the previous green candle, and then this area becomes profit booking zone because those who have bought it at low price, they sell it. Then the third candle of this pattern tries to take the price further up, but because of heavy profit booking, this candle becomes red, and this candle have much more volume than the previous candle, which shows that a lot of people sold the stock here, and this brings the price further down. Let's see why this pattern brings price down. If you mark the open of the first candle of this pattern and then mark the high of this pattern and then mark the low of this pattern, and in the end if you mark the close of this pattern, then you will see that this pattern is forming a strong inverted hammer, and you may know that at top the inverted hammer brings the price down. Which time frame is best to trade this pattern? One can trade upside gap to crows on daily, weekly or monthly time frame, and it also depends on your holding period, but daily time frame is usually considered best, and if you want to trade it on intraday basis, then 5-minute time frame is considered best. Take care of one thing in its volume. As soon as the first candle forms, just check its volume and ignore the volume of the second candle, and when the third candle take formation, just look at its volume, and it should be higher than the volume of green candle, because in this pattern first and third candle is quite important. Still, if the middle candle has more volume than the green one, then it is a good signal. Let's see how to trade it. Suppose price of a stock is moving up, and after a gap up you see a red candle and its volume is also good, and the next candle also takes price up but closes in the red, and its volume is higher than the previous candle, and these 3 candles forms upside gap to cross pattern. And at this third red candle, either one can sell or plan short position. And if after a gap down the next candle appears, then at this candle you can make a short position, and stop loss can be kept at the high of the upside gap to cross pattern. And as the price goes down, either you can book profit or use trail stop loss. Reward to risk ratio can be kept at 2:1. Make sure that your sell position candle and stop loss candle should not have much difference. Otherwise, your stop loss area would be big and you will have to put a big stop loss. Let's see an example. In this chart, you will see prices moving up and with a strong candle upside gap to cross takes formation with good volume also, and then the price starts falling. If you liked video, then please subscribe the channel and write your views in the comment box.